In this video lesson, I would like to explain how to determine where the price will go based on the chart that you are looking for. Well, currently looking at the chart in front of me, it is black background. You can see that with the green bars. If it is set to the bar chart, so I will put it to the candlesticks. So we have a clean chart, and I will also change the properties. Right mouse button here on the chart, properties, and clear the color scheme to the black and white so we can see easier. And also remove the grid. Right mouse button, click the grid, and you'll have the grid removed. And after that, I will increase the zoom in so we can see much clearly these candlesticks on the chart. Now, if you have prepared your chart like this or any other colors, how to define where the price will go? How the price to define will the price will go from the current market price to go up or it will go down? It's not easy looking on this chart like this, because it is not easy to see where the price could bounce. Is it this the top, or is this the bottom where the price could bounce from this bottom to the going to the upside, or the price will bounce from this top going to the downside? Well, there are several tools, and you can also make several analyses. First one is the technical analysis, where you use horizontal support and the resistance levels. Like this, for example, you use this horizontal line, move this line somewhere on the chart and put them on some levels where you expect that the price has been formed as support or resistance levels. For example, let's put this one here where the price has bounced from this area. This is the support. Price was falling down, it has stopped, so find support and bouncing back up. And then we have here, for example, a resistance where the price has risen in value, reached this level, and then bounced back down. So I can put this one here. This is one way how to determine where the price could go. Now, if you take a look here on the chart, on these candles has been several candles has been black, which means the price was dropping down. In the previous lesson, and also if you have not watched, you can also see how these candlesticks are determined, how they are defined. Just a quick reminder. Here in the quick access toolbar, I have put a 1 hour time frame where each of these candles represents 1 hour. So we have a 1 hour at 3 in the morning, 4 in the morning, 5 in the morning, 6 in the morning, and so on and so on. So each of these hours has been closed with price going further down, which means when the hour has been started, for example, like this one here, after this 1 hour, which means at 3 in the morning, the price has dropped and closed with this price level. This is the top price and this is the lowest price in that 1 hour. So how to determine will the price continue to fall down or it will bounce back up? Technical analysis helps you to define where those levels are, where the price could bounce from this resistance or from the support. Then you can also use a fundamental analysis, which means you are watching news, and when there is news regarding some kind of macroeconomic data, for example, GDP rate, will it change? So you can also check that for the US dollar, or for example, if it is the news are very bad, this price level for the gold will rise against US dollar because US dollar will lose its value. And the third one is sentiment analysis. For example, if you are watching Elon Musk and if he says, I would like to buy Dogecoin, the Dogecoin will rise in value. So it is influenced by some other personnel in the world, for example, Elon Musk or some other influencers. In this case, I'm using technical analysis, so I would like to explain to you how to define where the price will go. Just looking on these candles, it's not easy to determine will the price continue to fall down or it will rise in value. For example, let's take a look here. The price was rising, several candles are bullish, so this means each hour has been closed with the price higher than before. And then we have here a bearish candle that has been formed on the chart. The strong bearish candle has completely encompassed several candles before that, which means a pretty strong bearish momentum, which means the sellers have entered here in the market and pushed the price further down. So someone would expect that the price will continue to fall down in value further on. Why not? Because there is open space here to go down. But the price has reversed back up, returning back and continue to rise in value, but it has stopped right here. Why the price has stopped just right here? Let's take a look in the chart I am using currently. Let's take a look here. I have gold against US dollar on a 1 hour time frame. It is the same as this one, but take a look here. What is the difference? I have this one. Just a minute. I put this one here, so it is the same. Just a minute. Take a look here. It is the same chart, but I have here horizontal support and the resistance levels, which are a helpful tool to help me to define where the price could stop, where the price could bounce. Now, if you take a look here, the price was rising, reaching this area of resistance. This is the horizontal line, then bouncing back down, going all the way to this support level, bouncing from here, returning back up, reaching this area of resistance. This is the resistance line, and then bouncing back down and stop at its support. Now you can see how the price is respecting these levels, which are support and the resistance levels. Support is when the price was dropping down, finds support. That support is preventing the price from falling further down, so this is the support that could push the price higher. But when the price is rising in value, it finds a resistance. It cannot move further up, so this is a resistance where the price stops, and there is a potential that the price could retrace back down, which means bouncing from this support, from this resistance, going further down. Now, the price can sometimes bounce between these two price levels, but sometimes can also go through this level, not respecting, like this in example, because it was a strong bearish momentum. Now, let's return back to the first idea, how to determine where the price could go based on these candlesticks that are formed on the chart. First of all, it's not very easy to determine where the price could go, but you can also use these support and the resistance levels and the area around these support and the resistance levels, which are called supply and demand zones. A supply is where the sellers are waiting, that is around the resistance. A demand zone is where the support is, area where the buyers are waiting to push the price higher. So in this case, the price is currently at the demand zone, at the support level, and we can see the price has reached this support, going a little bit below that, which is a breakout to the downside, but we can see the price has returned back up. So this means this could be also a false bearish breakout, which is indicating further rise in value, because if the price could not make a breakout downside, there is buyers that are waiting here at the support that will push the price higher. Now, when the price starts rising, where the price could stop? Well, first of all, it is always on the next level, which is here a resistance, 2757.10. This is how I have created why the price would stop here. But if you take a look here in the past, you can see that the price, after formed this breakout, it goes to the next level, and that is here, and then retraces back down or going further up. In this case, the price has continued to rise in value, going all the way to the next one. So the price goes in steps, one step by step, in any of the directions. And this horizontal line, which is the support and resistance levels, helps you to define where the price could go. If you return here, it's not very easy to determine where the price could go, and especially if you have a clean chart without any support and resistance levels, because you cannot see where the price could go. Will the price continue to fall down in value, or it will continue to rise? Take a look here. On the 4-hour time frame, it is rising. On the daily time frame, it is completely rising. There is no black candles going further down. But if we go to the 30 minutes time frame, we can see that most of the time it is a bearish black candles. On the 15-minute time frame, lots of bearish, lots of black candles where the price is going further down. So it's not easy to determine where the price could go on any of the time frames just looking on the simple chart. So you're using some kind of tools, these horizontal lines, but you can also use, let's return to the 1-hour time frame. You can also insert some kind of indicators, for example, oscillators. So let's take RSI. This is RSI, something that the traders like to use. So you can use these levels. Level at 17, which means overbought. This means when the price reaches this area, you can see that here, there is high potential that the price could reverse back down. And this is something that has happened. We can see that here at this price level. So when the price goes down, it reaches very close to this area of oversold, which means it is oversold at the 30, the price could bounce back up. But there is no rule that the price, when it reaches this area of level, it will bounce and go down or go up. This is something that you need to make the test. You can use indicators, combination with this horizontal support and the resistance levels. And you can also find your edge in trading, which means your trading strategy that will help you to make predictions in correct direction when the price reaches those levels. Well, Without going further into depth about using indicators, any kind of a strategy, this is the idea how to define where the price could go just by watching these candlesticks that are formed on the chart. So simply using clean chart, it's not easy, but there are tools that can help you. If you have any questions, feel free to ask, leave a comment, I will try to answer as soon as possible. That's all for this lesson, see you on the next one. Happy trading! That is all from today's analysis. I hope you enjoyed. If you have any question, feel free to leave a comment. If you like the analysis, click the like button and subscribe. See you next time and a happy trading!